What's up, ladies and gentlemen, boys and girls? It's Victor here from www.vauniverse.com, bringing to you the best tips and strategies on how to grow your wealth. On this channel, we talk about how to make money. We talk about stock market investment. We talk about investing in bonds. We talk about real estate. We talk about small business, and we also talk about general online money. Today we're going to be talking about the 7 rules of the stock market for beginners. But before we proceed, I would like to say a big thank you to all those who have subscribed on my channel and all those who are coming back to watch my video. If you're here for the first time, please do me a big favor. Please pause, press on the red subscribe button. Yes, the one right there. Yeah, when you press on it, it will change from red to gray. That's an indication that you've subscribed. And one more favor, you see the bell icon right beneath? Yeah, press on that bell icon. That will notify you anytime I upload a new video. Again, today we're going to talk about the 7 rules of the stock market, especially for beginners. So I did my research, and I'm going to drop some of my reference in the description below. And also I trade with Questrade. And why do I trade with Questrade? Well, I trade with Questrade because they do have an excellent, a good customer service. There is no commission fees on ETFs. You open an account free of charge. They are international, and they do run a positive campaign right now. So when you open an account, you have $50 of free trade. So equally, I'll drop my promo code referral links in the description if you want to use that. Again, we're talking about the 7 rules in the stock market for beginners. So when you stick with these rules, you will notice that it will guide you on the long run. Especially when you're a beginner, it is very advisable to go with the rules on how to invest in the stock market. So rule number 1, knowledge is power. You see, before investing in the stock market, it's advisable to inquire about every company that you want to buy their share. It's good to know that the companies are creating value, so you can know what is their net worth. If you go to their website, most companies are transparent nowadays. You'll be able to see what's their earning report or the investment relationship. You can see their cash flow or their balance sheet to make sure they are profitable. Try to check if there is any red line. Do they have some liability or some expense? So those are the things to take into consideration. Because the bottom line is, the way you make money in stock market is when companies are profitable. Now let's go to rule number 2. Rule number 2 is only invest what you can afford to lose. So more practically, do not invest what you cannot afford to lose as a beginner. Remember, the stock market is completely different from other investment like real estate. In case of a crisis like what is going on right now, or there's depreciation, with real estate you still have the structure to show for. But with the stock market, if it crashes, it goes right bottom. So it's advisable, any money you put in should be something that when you lose that money, you're like, you know what? Life goes on, I'll try another investment. So that's rule number 2. Rule number 3. Fees do matter. Yep, the fees do matter. As someone who is new in the investment or in the stock market, target banks or brokers with little or no commission. Sometimes when you get to the stock market and you see a 2% commission or a 3% commission, you might think that it's so small, it's so little. But what happens? With time, it sums up. The power of compounding. A 2% might move up to hundreds or even thousands of dollars, especially when you invest on a long run. Say you are paying a 2% interest rate on a $5,000 principal. You know how much that will be in the next 10, 15, 20 years? It will compound. So try to go with brokers with no or little commission. That's why I always recommend Questrade, and I have the link below. So that's rule number 3. Rule number 4 is to buy low and sell high. Always try to buy in the dip when there's a bear market, because that's how you make money. You make money when the shares move from a low price to a high price. You make money from growth, which is, equity, and you also make money from dividend. So when it's low, like what is happening right now, this is the time to buy. You buy it when it is really low. Just check around and look at the 52 weeks low and 52 weeks high. Try to buy it when it is low, so as it appreciates, when you sell, you can make money. Again, buy low and sell high. And also remember, you don't lose money in the stock market if you don't sell. You only lose money when you sell. So even if you have some difficulties, your shares are going down, do not sell. You hold it, it will eventually go back up. You never lose money if you keep the shares with you. Rule number 5, be patient. There's a saying that the patient dog ate the largest bone, or the largest meat. Warren Buffett said, and I quote, "The stock market is a device to transfer money from the impatient to the patient." I repeat, you can see it right here. The stock market is a device to transfer money from the impatient to the patient. So what does that mean? The stock market is volatile. It fluctuates. It goes up and down like an evil spirit. That's the tendency of a stock market. So if the stock market is going up and down and you're panicking, then the stock market is not for you. Maybe try another investment venture. The stock market is not, it's not a baby. You don't wake up every morning and look at your stock, oh, I'm losing money, oh, I'm gaining money. That's how the stock market is. You got to be patient. If you want to make money in the stock market, if you want to do a swing trade or a long term, you got to be patient. Just like the king of the stock market, Warren Buffett, said. Rule number 6. Let bygones be bygones. If you make money in the past in the stock market, good. That's nice. If you lose money, well, it's rather unfortunate, but you gotta let the bygones go. You don't want the past to poison the future. The stock market is very lucrative. It's one of the most lucrative investment venture. That's why you see people like Warren Buffett being a millionaire, because his million is coming from the stock market. So bygone should be bygone. If something happened in the past, don't let it poison your future. So forget about the past, move forward. The future is more important than the past. Rule number 7. Do your research when it comes to the dividends. So dividend research is rule number 7. One of the ways of making money in the stock market is to receive dividend, which is kind of some compensation that companies pays to their shareholders for loyalty. But remember, dividend is not guaranteed. It's not even protected by the SEC, which is the Security Exchange Commission. Companies can stop the dividend or cancel the dividend anytime that they want. It is advisable as a beginner to do your research to make sure the company that you are investing in, if you are going in because of the dividend, you want to know what is the history. How long have they been paying dividend? Have they cut their dividends before? There are even websites like Seeking Alpha where you can check if they have been consistent, if they have paid their dividends up to 5 years, up to 25 years, which make them a dividend aristocrat, or if they have paid consistently over 50 years, which makes them dividend king. So it's advisable, do your research, and don't be hooked up with the dividend. You can see a 10%, a 15%, a 25%. This can be cut anytime. It's not guaranteed. So it's advisable, you know, if you're going to a company because of dividend, do your research. So those are the 7 rules of the stock market. As a beginner, if you use this as a guideline, then you'll be fine for the long run. Which brings us to the end of this video. If you find it valuable, please give me some thumbs up. I do like thumbs up. Share this video. Comment down below if you have other rules that you think are pertinent when it comes to the stock market, and just drop it down so we can all learn as we move towards this journey. Until then, I'll see you on the next video. Have a nice day. Goodbye.